Hi everybody, AT here. As promised, I'm making a video. Now I've got to 600 subscribers on Telegram. Thanks everyone for subscribing. What I decided I'd do is start the TradingView replay from the beginning of today and just show you how I mark up my charts from the higher time frame here on the H4 down to the M3. And you'll see here I'm marking the H4 order blocks, things to look out for good order blocks are when price has a strong move away from them and it caused a break in market structure, and you see all the H4 blocks I'm marking here have exactly that. I'm marking this BMS here for the order block here, and the reason I've not chosen the upper one is because it's already been mitigated. That's to say price has already returned to that one, so that's why I'm choosing the one slightly below it. Good. My next thing I'll do is to mark up the FVGs, the fair value gaps. For anyone who doesn't know what that is, it's just a gap in price. It's just a moment where there was a strong move and price didn't really kind of fill in any of that gap. There were no counter orders, let's just say. It was just a big rush of price, and these create what are called gaps, and gaps basically just want to be filled. So for me, my point of interests primarily are order blocks on the H4 and the H1 and FVGs on the H4 and H1, and I always want to see the FVGs filled completely before I'm going to use them as a point of interest. You can mark them with the naked eye, but you can see here there's a tool by a guy called Nephew Sam that you can find on TradingView, and that really helps you spot the FVGs. So I'm going down to the H1 time frame now, and what you'll see me doing here is marking up sweeps. That's another very important aspect of my strategy. As most of you probably know, a sweep is when price takes out a low and immediately spikes here upward, taking out the liquidity. However, this sweep was very shallow. You can see price only penetrated the low on the left by a tiny margin, and that's why I also marked it with the dollar signs, which is liquidity equal lows. So for me, price could either go up or down here, and I take longs or shorts when price hits one of my points of interests, which are either, like I said, H1, H4 order blocks or FVGs. So here I'm marking an H1 order block, and this is just before my trading day starts at 8 o'clock European time. I only take trades between 8 a.m. and 6 p.m. I'll never take a trade between them, and you see this order block here. It's quite sneaky. It's a small one, but there is a BMS there, so it's valid, and that's where price was when I started my day. Okay, so now we've moved down to the M3 time frame. Since price has reached my valid point of interest here, the H1 order block that broke market structure, I'm going to be looking for an entry. And what you can see me doing here now is really sketching out my ideal entry pattern. As you probably know, I've only got one entry fractal, and it's what I'm looking for every time price enters one of my POIs. And it's quite a classic entry pattern. It's called the SMS BMS, which stands for the shift in market structure, which you see me drawing out now, and then a break in market structure. Now price often SMSs, which is to say here on a short it would be a higher high and then a lower high, but it doesn't become valid as an entry fractal for me unless the BMS happens, because then you know momentum is turning. But crucially, I also want to see one more confirmation. That's to say, I want to see a major BMS. So as well as the SMS and the BMS, locally I want to see a major BMS, which here is the last major swing low before the high. You can see there. I also want to see liquidity built up, and I'm going to enter in the order block that caused the BMS. So you'll see this playing out now. It's never as clean as that when you're dealing with live price action. As you'll see here, there's a lot more noise. Candles don't form beautiful lines like you can draw in your trading view, but you'll see the same pattern exactly forming here, and hopefully my reason for entering will become clear. So here's the SMS I'm drawing out now. That's very clear. You've got a high and then a lower high. It doesn't become interesting to me, let's say, until we've got a BMS, which is to say the low that caused the lower high is taken out. Now usually I want to see a candle close below that to confirm my entry, but here I took a slightly riskier trade when I had a couple of spikes below it. Usually if there's a few spikes and momentum is downward, as it was here, the H4 and the H1 was very much bearish, price will want to go. So I saw my major BMS taken out there with a spike, as well as my break in market structure, and at that point I thought I'm going to enter. So really I market entered and caught a pretty good entry. You can see my stop loss, as ever, goes above the lower high of the SMS. You'll see loads of these examples in my trading journal, and price went. Now what's interesting about this is you could have got in, and I would have got in on a safer or a more classical entry here, which is I'm showing now, which is to say just where liquidity is taken out. So what you could have done, and what I would have done if I hadn't have been a bit riskier, is set my limit order just on the spike up here. I'm replaying it now so you can see. So I would have set my limit there just above the spike where liquidity was resting, because I knew that price would want to take that liquidity out before hopefully dropping, which is exactly what happened. I caught the other entry, but this one, as you'll see, easily played out for 5R. Just a quick note, I take full profit at 5R. I'll explain my reasoning in another video or another time. It's just much less stressful for me and super profitable. I set my stop loss to break even at 2R, and that's just cast iron rules for me, no partials. So you see there, very successful trade, 5R. If you're risking 1%, that's 5% of your account in one day. It's more than enough you need to eat. Okay, so I'm going to move on to the second trade, which was a long and was a loss. But you'll see here I'm marking out a new H1 order block because it was the last order block to break market structure. So this is now valid for me. If price returns to that, I'll be looking for shorts. However, price fell quite strongly and reached the H4 OB and the H1 OB that I marked out earlier in the day. So now I'm looking for longs, and even though momentum is down, it's quite a big moment for price to reach these order blocks, these valid order blocks. So I'm looking for longs, and you can see me kind of searching for an entry here, but you can see there's no real SMS or BMS, certainly no major BMS. So no entry yet for me. I'm really only interested in an entry once this major BMS is broken. I could have chosen the one above, but for me that looks like a major swing, and I'm always looking for a major swing from a major BMS. So you see here price is trying to break it, it's wicking through. I'm interested now because price is showing signs of reversal, and here I've got SMS. I'll always look for SMSs with at least 2 candles, and that's why I didn't choose the lower order block or down candle as an SMS. It's only 1 candle, I always want to see 2. That's one of my rules, 2 cast iron rule. I'll never take a trade unless I see at least 2 candle SMS. So here I'm marking out the major BMS line and the BMS line, which happens to be exactly the same, and you'll see now price shoots through there. Good, it's showing strength. For me now, I'm very much looking for an entry. Now, some of you might have thought I'd take the entry at the last order block that broke market structure. Now I do, usually. Usually I'd set my limits within that order block, but if there's a gap below it, an FVG here on the M3, I'm just marking it up for you. I won't, because I know that price will quite often want to come down and fill that gap just as it wants to fill the gaps on the M4 and the H4 and the H1. There's no difference really. It's just a smaller time frame. So it's too risky for me to set my limits as I normally would on the last down candle here before the break in market structure. Instead, I'm viewing that last down candle as liquidity. You can see the dollar signs. So I'll set my limits at the next order block, expecting the liquidity there, the dollar signs, to be taken out and price to fill my limits, and then hopefully shoot to profit. Here it didn't work out. About around 50%, slightly less of my trades are losers. It's fine because my losers are much smaller than my winners. I lose 1R and I gain 5R. So it is what it is. We lost that trade. I was 4R up for the day, and at that point I closed my charts. In fact, I think price shot up from there. So we had a good read of the charts. It's just price wanted to grab a bit more liquidity before going up. Well, that's all from me, Anarchist Trader, for this video. It's my first ever video. I hope you enjoyed it. Hope you gained some insight. Feel free to ask me any questions in the Telegram. And yeah, see you in the coming days. Bye.